The truth is, most traders lose money because they miss this one critical pattern: swing failures. Traders see price struggling at key levels, but don't understand what's really happening. As a result, they enter bad trades, get stopped out, or miss high probability reversals altogether. But once you learn how to spot and use swing failure patterns correctly, everything changes. That is why in this guide, we'll break down exactly how swing failure patterns work and how you can trade them. So, what is a swing failure pattern? If you've been trading for some time, you may have encountered them, whether you know it or not. These are very common events. If you know where to look on any chart, you'll be able to find swing points, also known as points of structure. These swing highs and swing lows play crucial roles in determining market direction. When a market is trending up, it's creating higher highs and higher lows. When it's trending down, it's creating lower lows and lower highs. But in reality, the market never really moves the way that we might think about it in a textbook scenario. Often we'll have lots of sideways in between different swing points. This happens typically in an area of high liquidity. Here's how we can make sense of this, thinking through the lens of the swing failure pattern. Whenever we have an area with relative equal lows or highs, the market often aims for this level as an objective. Typically, it will trade into these levels, sweeping all the liquidity, but then fails to close above when it's high or below when it's going low, and after that, it reverses. And if we know where to look and predict these, we can create powerful trade setups. It can take years of practice to spot these successfully. So here's the neat part. There's actually an indicator that can help you spot this pattern. And the best thing about it, it's completely free. So head over to tradingview.com. Once you're there, head over to the indicator section, search for swing failure pattern, and make sure it's the one by LuxAlgo. This indicator will take care of everything for you. When we have a swing failure pattern, the wick that surpassed that level will be highlighted on your chart for you. It'll even add an SFP label on the opposite side. Additionally, it will draw a dotted line to mark a confirmation level. If a candle closes beyond this confirmation level, a triangle will appear, signaling a likely market reversal. Since swing failures indicate possible reversals, they can help you decide when to exit a trade or even enter a trade. If you're in a long-term sell position, this indicator can highlight potential retracement points. And likewise, if you're looking for counter trend opportunities within a specific zone, it is excellent for spotting market tops and bottoms. Adjusting the swing sensitivity will allow you to detect larger swing levels, and that will reduce the number of signals but increase the accuracy. But that's not all. By using the volume validation feature, you can refine your setups even further. When a wick breaches a swing point and an SFP label appears, you can analyze the volume outside this zone to determine its significance. So for example, let's say you're looking at an uptrending market and you only want to be looking for buy signals. By disabling bearish swing failures in your settings, you're left with only long setups. By using the volume validation filter, you can then refine the selection even further by requiring that volume outside the swing area be less than 25% of the total volume. And as a result, only the good, high probability signals will remain after eliminating much of the noise and the low probability ones. This method will help you identify weak downward swings that may lead to stronger reversals. A real quick example here. We have a market that's been moving sideways for some time, and it's clearly forming a range. Notice how there are multiple relative equal highs. These are going to be key levels to watch. If a swing failure pattern occurs here, it could signal a solid trade opportunity. After some time passes, price moves up and sweeps these highs. The indicator highlights the SFP along with a confirmation signal indicating a potential short setup. We can enter a short position here, just looking to place our stop loss above the swing failure pattern, aiming at a favorable risk to reward level that you're comfortable with. You might be thinking how this could play out in a trending market. In this example, there's an uptrend that's followed by a period of consolidation. This creates relative equal lows, which becomes an area of interest for a possible swing failure pattern. Eventually, the price dips below these lows and forms the pattern. Since it breaks above the confirmation signal, this provides an opportunity to go long. We can place our stop at the SFP and aim for a favorable risk to reward ratio again higher. While the indicator is not necessary to trade the swing failure pattern, it's a great tool. I recommend you check it out, and once you get your legs, you may be more comfortable without it. If you've learned something from this video or gotten value, please share it out, subscribe for more, and hit that like button. We have a lot more free content on this channel. Check it out.